I mean, he should be here soon, right? I imagine.
He better be.
He linked it to his stream, so he should be here in a second.
Okay, good. Hello, ladies and gentlemen. What do you do? Amit?
No, this is your show. You got it. You're the SoFi guy. It's SoFi Weekly. You're the SoFi guy.
Ladies and gentlemen, welcome to the SoFi Show. Okay, today we got big news. Actually, there's only one piece of news that at least I can think of. But we're all here together as friends, and we're here to talk some financial banking stocks. Amit, what's up? I'm not as good at. I don't have enough experience as you. This guy goes live like 3 times a day.
Technically, SoFi's up. We hit $9 this week. I don't. Did we end at 9? We got to 9.14 this week, which was really nice to see.
Yeah.
What did we get? 9.07, and SoFi's now 24 hours on Robinhood, so people have access to that.
There you go.
Yeah, it wasn't a crazy week in the markets. I think S&P ended at like 446 or something like that. Steve, how was your week? Anything interesting you want to tell us before we get into some of the news?
Yeah, sometimes people should just take an offer when it's presented to them.
What do you mean by that?
So real quick, I happened to have gone to an estate sale because there was something I wanted. I presented cash, tried to work out a deal. The people did not take the deal, and I understand they are a company that is called in to run an estate sale. They get a percentage of whatever they overall give their client at the end of the round. Get it? It's a 2-day event. I said to them, okay, this is where it goes for on the secondary market. This is what I need to be into it for to get my money out. Very thin margin. If it does not sell, here's my cell phone number. Feel free to call me. They decided to call me later on that day. Okay. So text back and forth. And have you guys seen Draft Day at all with Kevin Costner?
No.
So I almost pulled a Kevin Costner, but I figured it'd be too cliche, so I didn't use his quote. But I simply told them that we are living in a different world than we were previously, and this is now my offer. And they said to me, this is a very unfair offer. And I had to explain to them that in business, there is no such thing as an unfair offer. It may be a low offer, but now you're going to waste my time for a second time driving out to Jersey. And there's tolls and other things associated with it. And you should have taken the first offer when I had cash in hand and could have handed it to you.
This is for a property, Steve?
I'm not going to a property with cash in hand, Amit.
So what was this for? What were you trying to buy?
Pokemon cards.
Something.
Dude, what the fuck were you trying to buy? Because when you said estate, maybe I thought you meant like real estate.
It's an estate sale. So basically, if you're moving or if somebody passes away.
Pokemon Legend died.
What were you trying to buy, Steve? Are you trying to buy cocaine? Like, what are you trying to get?
No.
Okay,
nothing of that sort. Some type of collectible item.
You drove all the way to Jersey.
But basically,
it was a handmade sword. I definitely know that Steve has a bunch of swords in his house. Am I wrong?
Sometimes the first offer in cash is your best offer because obviously you couldn't sell it and you came crawling back. And then when I told you the new offer because you blew the first one, the response, I'm going to read it. It is hilarious.
Okay. This is what happens when SoFi has no news.
No.
SoFi does have news. It's just not what Steve.
Even if I can, this is not a fair offer by any stretch of the imagination. I will let my client sell them, not going to say where, and forego my commission because I cannot give their stuff away like that. Now, the whole point is that this person or this family hired you to sell all their stuff so they don't have to do that. You have a buyer. You screwed up the first offer. Don't tell me the second offer is unfair because you're wasting my time. So just less money that they're getting.
You didn't end up buying anything, basically.
Well, we'll see if they come crawling back. But I gave
Yo, this reminds me. One time I was negotiating with a dentist for a root canal, and she was like $1,500. I was like, no. And she was like, all right, we can't do it. I was like, bye. She called back 5 minutes later. She's like, all right, we'll do 1,000. I still said no. But like the fact she called back 5 minutes after, it's interesting when they come crawling back, right?
It's interesting. All right, let's get into SoFi.
Okay, but I don't want to do it without Tevis. This is big news.
He just
so-
texted.
All
He
right,
said
so
he
Tanner, let
said
me
he's going
ask
to be
you
a couple minutes
something,
late.
because Amit won't give me a straight answer. Would you buy shares of SpaceX?
Yeah. Depending on the financials, I haven't looked into it at all. But yeah, I mean, SpaceX would be an amazing company to hold.
Okay.
What are you
I
anti
would-
that?
I would-
You wouldn't buy SpaceX?
No, so there are several companies that have shares right now, and one of them reached out to me, and I'm considering it. I mean, I did my due diligence.
What's the
It's not-
valuation?
the last round was 139 billion. So what they told me is that shares are going for between 150 and 155 on the private market. It is a premium, and that's where it's a premium on the last funding round, and that's where institutions are selling them. And basically, if SpaceX goes IPO, the rumor is 18 to 24 months, their fee is 20% of the profit. So basically, if you have X amount of shares and your profit ends up being 10 shares, they hold 2 shares as their commission, which is interesting because that means it's not a taxable event because you're not selling anything to pay them. So it is interesting. So if you buy 100 shares and
Well, if you believe in the SpaceX thesis that Elon's laid out, I think it's an easy reason to buy right now. Now, if the market tanks, 150 billion probably won't happen. But if we're past the rate cycle and his vision plays out, yeah. I mean, Starlink has quadrupled their revenue in 1 year.
Yeah, the way I'm looking at it is who's really going to be their competition? It's going to be them, Blue Origin, and NASA, right?
Yeah. Maybe Rocket Labs, but they're doing some different stuff. It's not exactly.
But that's different. I mean,
Yeah.
there is Rocket Labs the one that's 3D printing all the rockets?
I
Or is that
don't
different?
know. I actually don't know. It's a $2
more of a
billion
Matt
company.
Money kind of question.
Yeah, it's a very small company.
But regardless, so it was interesting, and I'm considering it. We'll say.
How many shares would you buy if you actually went through them? Or like 10 grand, 20 grand? Are you trying to make a sizable position?
No, I mean, there's a minimum investment.
Okay, got you.
So my thing is, I have no idea what the company's valued at. I haven't looked at the financials. I haven't signed up for anything yet. I did the due diligence on the actual company. It's a legit company. They have
Is it
done a lot of
Starlink? Is that what you're talking
diligence.
about? Is one of the comments, the specs you're talking about Starlink?
No. It's SpaceX.
SpaceX.
Yeah,
Oh, okay. Sorry. Okay, never mind. Sorry, I thought you were talking about a potential off-brand that is in the same industry.
No,
No, you're talking about the legit SpaceX.
no, SpaceX.
Got you.
So the way that I'm looking at it is, if
I
this
would
actually
absolutely
does
buy
go
SpaceX
public,
in private markets, especially. Yeah.
like if this actually does go IPO, how much of a premium is it going to get in 2 years versus where I am able to get it for now? And is everybody just going to pile into it because they think it's going to be the next Tesla? I need to do more due diligence on it, but it is interesting.
You know, our friend Sachin got in at like $15.
Yeah, one of my buddies got in somewhat low also. I don't know what price, but I know he got into like 4 or 5 years ago. So it's got to be low.
Throwable just said that Shift 4 is another proxy of Starlink. They process their payments. That's crazy. This is a company that I was just doing due diligence on, I think yesterday. So the idea that just came up, that they're the payment processor for Starlink, would be really funny. I really like that. Is Tevis not coming? What's going on? I mean, we're 9 minutes over here, and I'm holding on to news.
I have no idea. He texted. He said he's gonna be a couple minutes late.
Mitt
How long
and
ago?
Tanner, in our private chat, I put the link of the place that I spoke with.
Okay, cool.
You guys don't get to see it.
Why would you do that?
Do what?
Because I can rub anything that I want in their faces. Okay, this is also what happened. What was so funny? What
It's just not nice.
Steve always does this, where he goes, "Oh, I'll tell you guys about this story right after we are not live," and then he tells us stuff like why he didn't buy into Bitcoin. So who's the real meanie? Okay,
Because I'm a moron.
because you're a moron.
Because I'm a moron. That's why.
Yeah. Yeah.
In all fairness, it was very difficult back in 2012. I could have got it $6 or $7, and I'm stupid because I didn't take the time to figure it out.
Yeah.
All right, we got. I don't know if Tubbs is coming or not, but we got to move on to SoFi.
Okay. There was some news that was announced. Student loan payments information is starting to come in. How are people paying back their student loans? What do you guys think about this chart right here?
Okay, let's see this.
It's the first I'm seeing it.
This is, maybe I can even actually can we stop sharing and I'll do it a little bit bigger. There we go.
Okay.
This is the chart for student loan repayments from the US Treasury, from the Department of Education. And if you can see here, just in this last month in August, people are starting to pour back into paying back their student loan payments, meaning that people did have the money. They're not starving to not pay it back. There are people actually paying it back, which you could say hurts SoFi a little bit if people are paying it back federally. Or you could say that there's a definite opportunity that,
So the a lot of it is bachelor's degrees, I would imagine, because SoFi's going after masters, right?
I mean, I don't think that necessarily.
No, that's what Hager said. SoFi's not going after a 4-year business student; they're going after the MBA, right? Because I'm getting 5% from the government, no matter what degree I'm doing in bachelor's.
Sure, but I think it also depends on how long you want to amortize it out for a higher rate. And I don't even know, is it 5% that you can get right now? I don't even know if that's true or if that's your old rate that you got previously.
I don't think it's changing from federally from 4.99. It was, I mean, I'll see in October, but
no, not yours that you've had forever. I'm talking about people that are going to school today.
Oh, those people. Yeah, I don't know what that rate is. Yeah.
Regardless, and I'm not going to say, is this data correct, because it says U.S. Treasury, so I hope it's correct. But am I blind, or do these lines hit at the highest points of the past 13 years? I mean, you go across from the top of the red, highest point. You go across from the top of the black line, highest point.
What is the difference between red and black?
Yeah, so the red is the 20-day moving average. So the black is actually what you're looking at. That's the real data there. But what people are saying is that whenever you actually zoom in and look on the daily charts, which is what you're not seeing right here, it's already starting to come down. Okay, so what I think this is a lot of pent-up demand, an opportunity for people to, like, now they know their answer, so there's a rush to pay off. It doesn't necessarily mean that this rate is going to keep up, right? This is more like almost like revenge travel in a way. We're not going to see this new spike stay up here, but it is definitely a rush for people that have gotten all of this, opportunity to not need to pay back, is now knowing what the answer is, and so now there is an actual, payback. And it could lead to a huge opportunity for people like SoFi, or for companies like SoFi that potentially we didn't get to see in Q2. We might see materially in Q3.
So you think SoFi's opportunity from this is that even though there's some pent-up demand to pay off these student loans, it's not going to impact the overall originations or the volume of originations for this quarter?
Say that again?
Like, you don't think this is going to affect the volume of originations that SoFi will be able to get for student loans? Because that was the concern, right? Is that too much is being paid, therefore they can't.
Yeah. So I mean, it's more of a two-prong. I don't know if how I want to look at it. I think people paying off their student loans and knowing that they know their answer now, they know what's actually happening with forgiveness, that they are paying it off. Yes, we're not going to actually get those originations of the people that are paying it off, but I don't think this is nearly like
Tanner, paying it down or paying it off.
Same thing.
I'm going to assume
it's two completely different things.
Oh, well, no, I see what you're saying. Yeah,
I'm going to assume this rush of payments is paying it off.
So
because why would you rush into just making your first payment?
So that's assuming that people were fiscally responsible, and human nature is not being fiscally responsible and saving up a amount of capital to, once it goes into effect, just pay it off the balance. What's the average balance?
For student loans or for the ones that SoFi is trying to go after?
For student loans in general, what's the average balance?
I think it was 30,000, something like that.
Most people are not saving 30 grand just to repay all at once.
No, of course not. But I think there's a lot of people that might have 4,000, 5,000 left that do have the ability to just,
For the people that have
or the
a
Emits of the
lower
world that
amount,
held.
I could see a case where they would just say, you know what, let me just get out of it because it's one of the highest levels of debt I have. So yes, I could see that, but I don't think people that have 20 or 30 grand are just going and writing a check and sending it in tomorrow.
I think so too. I don't think people.
Can you bring up Heinzie Ketchupy's comment? I'm absolutely insulted. Who has the thicker pomade for their hair, Tanner or Steven? I have nothing in my hair.
Yeah,
It's just hair, baby. It's just hair.
Same with me. So I actually got out of the shower and combed it like 30 minutes ago. So it's still staying in the same
You
position.
combed for the pod? I just put on a hat.
I needed to wake up.
What, you were taking a nap?
Just keep it like that.
No,
Honestly,
I
you look like a living, breathing
tired.
pineapple. It's
Dude,
ridiculous.
I've been up since very early. I needed to wake up. Sorry.
That's so
It's wild, bro. This shit's just wild.
Dude, just shave your head.
No,
and yet he
bro.
still gets more haircuts than any of us. He just doesn't.
Yeah, I got a haircut today, bro. Yo, it went inflation. He said $30. I was like, bro, it's 25. He said it's 30. I said, all right, man. You're the only guy who can get my shit right. So $30.
He's the only guy that can get. He does nothing to the top.
They
of
have
your
like
head,
5
even.
other barbers, but I've been using this guy for 2 months, and he's perfecto. Like everything he gets right. So I'm just like, all right, I don't want to fuck it up again. So $30. You have pricing power. You have leverage. You proved your value. Here's another $5. That's it.
Did anybody see the interview on CNBC?
Noto. Let's share that clip.
I wasn't talking about Noto, but we can talk about that one.
Let's do that because
I was going to bring that up afterwards. The Etheridge one.
No one knows
The
what
Enbridge run.
The Etheridge, it's a firm. Admit, I texted it to you.
But what did they talk about that was so important? Bro, I'm sorry. I can't respond to every single link you send me. I'm like kind of busy here.
It's a 3-minute interview, and they were talking about SoFi in the middle of it.
Well, if you said that, I would have watched it. But you just send me a random link at like 4 p.m. on a Wednesday. It's like I'm doing something.
Yeah.
Like
if I send you a random link from something from CNBC, probably pertains to something that you're interested in.
Okay,
I don't even know if that's true.
Do I send you random CNBC stuff? No.
You'll just send me a random message, be like, "We need to start alternative asset weekly," and I'm like, "It doesn't pertain to me at all. I have no alternative assets."
Steve, I'm not doing this shit. I'm sorry, bro. Can't do it.
Trying to get you guys views. Trying to get you guys views.
No, Steve, that's how you don't get views. Like,
I promise you, the alternative asset segment on YouTube is way bigger than the finance.
Steve, I don't think you understand. You're talking to someone, 2 people who live stream every day. We know a little bit more about what works on YouTube than you.
Promise you.
I will take a bet with you, Steve, and do the podcast just so you have to pay us back. And I will make it $1,000 bet and make money off of you just to prove
obviously
that.
if we just
everyone
do
in this chat's
one,
gonna retweet it and have all their friends and family show up.
In general, there are more.
How many views do you think an alternative? No, let's have this conversation. How many views do you think talking about Pokemon for a month, 4 episodes, 1 every Friday would actually get on YouTube?
So
with our promotion, me, Tanner, to have all of us tweeted out all this, how many views do you think it would actually get?
I think there'd be a lot. I mean, there's some of these that I look at. I'm scrolling through my YouTube history. 70,000, 150,000, 300,000 views.
I will bet you $1,000 right now we will not get 5,000 views on that video over 3 months. Leave it up for 3 months. It'll be a 3-month bet. We'll look back in 3 months. If it's 5,000,
we only do one, but if we build alternative asset weekly, we can tap into the comic book market, the Pokemon market, and the sports card market.
No,
I am telling you, it'll get huge.
That market isn't on
YouTube.
YouTube.
3 dudes looking at you.
That's true. The content also wouldn't be good.
Anything.
That's the problem. The content.
Anyway, go to the SoFi stuff. Go to the Noto stuff.
All right. Here's Noto talking about SoFi.
Oh, do you not have the full clip?
Real solutions.
Do you have the full clip? This is 2 minutes.
I can bring it up.
All right. Get the full clip. All right. While Tanner's getting that, let me continue to school Steven on this. Steven, all right,
A
how do I
minute.
put this lightly? I don't think you understand that not most people in the world care about Pokemon.
I don't think that you understand it's the largest media franchise globally. And I can bring up the statistics.
In the private chat.
What up?
Oh, you have the link here? Okay.
In the private chat starts at 1350.
But this is audio.
It is audio only, but it's either the full
Okay.
8-minute interview or it's a minute and 30 seconds where he says nothing.
Yeah, they didn't release it on video, but it's on the podcast version of Mad Money.
Okay, interesting. All right, so here we go. You said 1350, Tanner.
1350 is what it says.
Well, you got an Indeed sponsor here.
Is this another SpongeBob clip we're about to watch, or what?
I'm just telling you.
Oh, hold on. It's not shared. Here now. Okay, that's the problem. So it's
Candidates with the right skills. Indeed's a powerful hiring platform that can help you do it all. We streamline hiring with powerful.
Okay.
The last time we checked in with SoFi Technologies, the disruptive digital bank
Exactly on
its
1350.
stock had plunged to $5 and change in response to
it was 1450. 1350 was the ad. So I think 1450 is what you're talking about. It's at 1455 right there.
the widely panned earnings report and the mini banking crisis. But after speaking to CEO Anthony Noto, I came away feeling just as bullish as ever. I hope you listened to that interview because the stock quickly caught fire afterwards. In fact, SoFi's stock jumped 20% in a single session when reported at the end of July, $11 and change. Although much of that you can say is short covering, it's now back to 9. In the last month, it's been hard hit, like all the banks, by rising long-term interest rates. I get that. And Wall Street's now worried about the pace of loan growth, the entire industry. Probably some profit taking involved. But remember, the stock doubled since we had Anthony on. And to me, that's what matters. That's what in our business counts. SoFi's now raised its entire post-quarter earnings and then some. Sure, I think you're getting a truly terrific set of numbers for free. Don't take it from me. Let's take a closer look with a man who came on the show and answered tough questions. The stock had been trading 4.545. Told us he wouldn't need to issue equity. Told us the quarter was going to be great and the year would be great. And you were dead right. And you stood up to the short sellers. That matters to me. Welcome back, Anthony Noto.
Jim, thanks for having me.
All right, so now, during a very tough period in banking, for a lot of banks, and honestly, you guys have grown 9 consecutive quarters of revenue growth. You're about to become GAAP profitable. Everyone else is going the other way. You're going forward. How's that possible?
It's possible because we have a one-stop shop for your financial needs, and we've seen very strong demand for financial products. Rising rates, a couple of banks going out of business, the fact that the cost of credit card debt is higher, and the opportunity to invest in new things has caused people to look for other options. And because we are a one-stop shop, we're going to be at the top of the list for that. One of our products is incredibly differentiated right now. Our checking and savings account provides 4.5% interest, the ability to get up to $2 million of FDIC insurance, which was really important after we saw the demise of two banks. And then you can spend as much as you want with no limit and not have to keep the money in the bank.
Now, you're a creative banker, but none of those things is going to hurt your earnings. They're all going to be additive because the number of clients you bring in. How come other banks, no, you've been in banking. I'm going to ask this. You don't have to say, well, I don't speak for the other guys, but your bank has real growth. The other guys seem to be content with not growing their account base. How's that possible?
Yeah, we're able to grow because of a couple of reasons. One, we're going after a demographic that's been largely underserved,
Right.
and we're giving them products that are going to meet their needs for the major financial decisions in their lives and the days in between. We can save them a considerable amount of money through personal loans to offset their credit card debt, which is rising in interest rates and the amount. We can also help them refinance their student loans at a lower rate if they qualify. And then, of course, giving them great options. As I mentioned, checking and savings, they get 4.5% interest. But we're also offering IPOs and invest and give them access to products they wouldn't otherwise get.
Okay, but here's what I don't understand. Your FICO score is 745. Average income is 164,000. These should be the clients everybody wants. But they come to you, even though you're new. You're not a bank that's been in business for 100 years. There is something else that I'm trying. It's almost an ethos. I think people always understand. People like being a member.
Well, we're mobile first, and we also provide this member relationship. So when you use our products, you become a member. We give you a free certified financial planner. We can give you free career advice. All of our products are available on our phone, easily accessible at any point in time. So you can pay when you want, how you want. And essentially, we're helping people get their money right because we help them borrow better, save better, spend better, protect better.
Now, you also, I think, do something that people were concerned about. You mentioned in passing, people thought, oh my God, these guys are never going to come back because there's never going to be payments again for a student loan. That had been how we first knew SoFi before you. Then rates go really high. Now, you said you can help people get a lower rate, even though we know that rates are high.
One of the products that we offer is unsecured personal loan. So those with credit card debt are consolidating that variable cost debt into fixed cost debt over specific terms so they can pay it down over time. Our student loan refinancing product provides the same thing. If you have a student loan, you want to lower your monthly payment, you're able to do that either via lower rate or extending the term. There are always trade-offs with those decisions,
Right.
but we're giving people that opportunity to get their money right through a variety of different vehicles, and that's very appealing to them.
Are you doing anything with artificial intelligence that you can make these judgments about so many people? You have a huge membership to be able to make it so that your risk is protected?
Sure, we're using artificial intelligence in 3 ways. One, our technology platform, where we enable 135 million accounts in the United States and 8 billion transactions a year. We're using artificial intelligence for those partners to reduce the instance of fraud. We have a payment risk
You have a
platform.
fraud alert system immediate?
We're using machine learning and artificial intelligence and the data from 8 billion transactions to identify fraud at the transaction level. We're also using it in customer service to reduce the number of contacts per customer and time to resolution, and a product called Connecta.
Okay, so we want to end it off there.
Sure. So just so what I think is so funny, where he said, "Oh, we're building a fraud and fraud and detection system off of 8 billion transactions." That's a tiny fucking amount. That's so small. But yeah. Anyway,
I just thought this was just the regular, like Jim at this point is throwing these layups, and Anthony Noto is just talking the same book, other than the fraud part, which was kind of interesting and metrics driven. I mean, the value proposition, the mission statement we've heard time. I'm pretty sure I can regurgitate it at this point. The spend better, save better. It's cool, but I feel like every subsequent fireside that Anthony Noto comes on, we have to, pay more and more close attention for nuggets of information, just because 80%, if not more, is the same, sort of the same stuff, because there's different audiences. But Jim historically has been.
The first half is that. The second half is new. That's what I find it is.
Oh, okay. Well, then, fair enough. Well, so, okay, what was in the second half then that we didn't get to?
No, I don't mean that call specifically. I just find he has to give that spiel, and
the
then
intro.
People get to ask him the real questions. But it's always that same, like, we are the next one-stop shop digital bank.
Yeah, either like whether it's earnings calls or fireside chats, it's always the Q&A at the very end, like the audience Q&A. That's the best part. Like, that's the only chance you can have some novel information.
Yeah, no, I definitely think the second half is better, but it's also just extremely long. I did also want to bring up, and I don't know, I'll just speak for my own perspective here. We were a little bit reviewed by SoFi's team to see if there was a possibility for management to come on to the show, and we got rejected. Amit, you're muted.
When did this happen? You didn't tell me about this.
Recently. So, and I'm not going to say sources or whatever, but that they said that we were way too stock focused, which of course we are. We're an investing channel, right? Or at least our channels, and they want to talk about the products and the features.
Wait, hold on. SoFi's management team says we are too stock focused.
Yeah.
And then they do an interview with the guy that hosts a show called Mad Money for the past 20 years, who literally tells people when they call in to buy or sell a stock.
Yeah.
So CNBC is not too stock focused, but SoFi Weekly is. Interesting.
But I think it's different. I think they can
Please
go
tell
on
me
to
what the difference is. I'm all ears. I want to hear the difference.
Anthony Noto has a personal
Goldman
connection.
Sachs and Barclays and actual investment firms and talk about it as an investment.
Put in the private chat how you found this out.
Well, okay, so I think it's also the fact that management right now, like it's a wild card. Like if Anthony Noto goes on Jim Cramer, he probably has all the questions pre-vetted, and they already have a personal relationship. He knows that there's not going to be any like low blows. with us, it would be like a wild card basically because he's never talked to any of us before.
No, that's we can pre-screen the questions. We all are down to do that. That's not an issue. So I don't know, man. That's a bullshit excuse in my opinion. It's a very bullshit excuse. It's if they're retail, I mean, and it's not SoFi. This is all like Palantir, right?
That's what the investor relations page said. So
yeah, the investor relations page is bullshit. I mean, if they actually want to contribute to retail investors, they should talk to retail investors. If you don't give a fuck about retail investors, just say you don't give a fuck about retail investors. You can go talk to Jim Cramer. But
I don't know. All I know is there could be some, not certificate, but some sort of regulation where Jim can actually talk about that, where we are just for, guys on YouTube.
If they don't respect the show, that's a better answer than saying we're too stock focused. If they can say, guys, you only reach 300 people, or guys, you're not professional enough. I don't think it's that either. I don't know. It's a problem with every company though, that they still trust mainstream media way more than, like, how are you a digital native company that's saying big banks are going to die? And then you're like, but the big media companies are going to survive. It's like, I don't know, man. It's not the smartest look from their perspective on mine, especially when we would pre-screen the questions. We literally said, we don't even have to ask about the stock.
And you know what? I'm just thinking about it right now because I honestly didn't give a lot of thought to
send something into SoFi?
I don't know. This is Tanner's news. I have no idea about this.
But do you know what I'm even thinking about this now?
Send something into SoFi without even saying anything to us.
What?
Did you see that smirk he just gave us?
This is Tanner's show. He connects us to opportunities. If he asked SoFi and they said no, then he
can't even keep a straight face anymore.
I don't even know. I didn't even hear what you said, Steve. I've got
He's asking, did you email SoFi and ask them about this? How did you?
No. I've got. There's other people. It doesn't matter.
See what I mean? He's squirming.
Regardless, look, to be honest, it's nothing personal. I mean, I would never expect them to come on like a dinky little YouTube thing like this, but that's a bad excuse that it's too stock focused. Like, we don't need to talk about the stock. So JP Morgan, Goldman Sachs, that's literally asking, hey, are deposits on pace for Q3, which is a question that will influence how you invest in the company, is not too stock focused. Like,
well, I even want to say, I was just thinking about this. They literally had conversations, and I love the guy, but with Chris Hager, data-driven investing, about stock-based compensation for the company. Like, I'm just thinking about that now. It doesn't even make any sense. Like, that's as stock-focused as you could bring it.
Yeah, but I think there's a difference, right? Like, there's the surface level of trading the stock, and then there's the actual, talking about financial engineering, which is what Chris was talking about, right? How do we manipulate, or how do we bring down SBC, or how do we leverage SBC to make the bottom. I mean, look, the title of the stream is literally SoFi touches $9. Like, I think of all the news that was out this week, like that's and it's fair. Like, I get it, because it's what a lot of our audience is looking at, but I kind of see both sides of it.
Yeah, I mean, I see their side. I know I'm being facetious here, like how they're going to CNBC, but I totally see their side. Like, if I was management, I'd be like, we are not doing the SoFi Weekly. That is not happening. So yeah, it is what it is.
Jeremy Rischel sold more shares. What do you guys think?
Right. Yeah, and somebody else, the chief something else officer, Andrew something.
What do you think?
Chief risk officer.
I mean, look, if those shares are part of stock-based compensation, then they have every right to sell them because it's part of their package.
I mean, is it part of the package, or is it like they decided they want to sell? That's the only, because if it's part of the package, it's whatever.
Well, it's not a part of their package to sell, but
no, like, was it determined 5 months ago if the stock was
so
Kevin,
if they're pre-approved stock sales, I think is Amit's point, then that's fine. If they're random sells in a quarter where, like, they're expecting to end off the year profitable, and Anthony Noto has himself used the buying and selling of SoFi stock, particularly the buying of SoFi stock, as a tool to stoke retail investor enthusiasm, to stoke the morale. And if they're going into a quarter where they have this really, really big, audacious goal, and then you're selling outside of a predetermined schedule, then that can do the opposite effect of what Anthony Noto was doing back in December and March.
So, two things. I want you to bring up the second comment that Ken Megan said. Ken Megan 44. The second comment. It's true. Now bring up the first comment.
I don't even get what Jeremy is a small package. Okay. The first one, ask Noto to share his life story. Don't even talk about SoFi.
Jeremy Rischel, the CTO.
Jeremy Rischel, the CTO.
Oh, I thought he was talking about
saying-
Jeremy financial education.
No, I'm not. No, I know Jeremy Rischel, the CTO, the person that's selling, has a small package. I thought that was just funny. But Ken Megan, I want to talk to you directly. I have literally never seen Noto interact with an individual more than he's interacted with you. Okay. He retweets everything that you say all the time. So why don't you reach out to him and tell him to come on the SoFi Weekly and that we will only talk about his life story? And I'll hold that on everything. I just want to start a relationship with the man. Let's just, baby steps here. Come on.
Tanner, have you listened to his interview from Stanford?
Yes, I
think
have.
sent it to you. It's one of the greatest interviews from a CEO I've ever heard. Besides one from Barry Sternlich, who I think is still the best CEO in the REIT space. He's given some quite interesting ones also. But I highly recommend people go listen to that because you get some real insights into how he thinks.
Yeah. Yeah. No, I don't know if I put it up there with some of the best speeches I've ever heard, but
From a CEO about what they are doing, for me it is.
Let's move on to this because I want to give a shout out to Tevis. He had Jeremy on his channel and he asked him, the actual Jeremy, not this SoFi seller guy, Jeremy. And he asked him about SoFi, and I think we should play a little bit of that. And see why Jeremy is hesitant about SoFi, because maybe it sheds a light for why other people in the industry are also hesitant around this stock. I'm going to put the link in the chat if anyone wants to watch.
Before you play that, anybody who's hesitant and doesn't want to invest shouldn't invest. People should do their own due diligence and make up their own decisions. And just because we're bullish on something, we could be 100% wrong. People need to do their own due diligence.
This is what you're going to say on Alternative Asset Weekly. Just because we like Pikachu doesn't mean that Pikachu is going to go to the moon. But,
no,
how are we going to pump Pikachu?
You buy raw, you grade, and you flip. There's a whole algorithm to it.
Okay, but
there's a whole
not to be
algorithm
discussed right now. I want to hear this.
All right, here we go.
I invested in SoFi yet.
Yeah, tough decision. So it's interesting. SoFi, literally last night, I was looking into potentially creating my first SoFi account. Actually, I'm looking at them for either doing maybe a CD, but probably a savings account with SoFi, because I like to have my money kind of spread around a little bit, especially after what happened with some of the regional banks and whatnot. You never know. And so I was thinking about putting like 50K in SoFi savings. And so I'm probably going to create an account with SoFi, going to experience the product maybe over this next few months. It's one thing to like look at a company and, read about it and, they got all these different things. It's another to kind of like get into the product, experience it. How do they reach out, emails, upsells, like all those sorts of things. I'm really interested to kind of become a customer and see how things go there. But bottom line, obviously, is not in a good place still. It might get in a better place soon. I think I was already in too many bottom line bad companies to begin with. Certainly going into last year, I was not in a good position, 21 into 2022. And so I'm really trying to watch risk exposures in terms of like new stocks that are, let's call it money losers on the bottom line. That's really what it comes down to. But we'll see once I experience the product, if their financials start coming around, especially with student loans coming back. And I think it definitely has potential, but we'll see. It also really comes down to when it comes to SoFi, how is it going to be valued long term? And I think that's a question I'm still trying to figure out. Is this going to be valued like a bank? Because banks trade at 10, 11, 12 Ps, 8 Ps, like it's a joke, right? If SoFi is going to trade like that, then it's going to be tough sledding for years, but if it trades like a high growth company, there's obviously room for multiple expansion.
Okay, so first let me start off by saying that I've been following your channel for a while. I can summarize the other reasons. Yeah. So
okay, you summarize the reasons, and I was going to ask a question that piggybacks off that. Go ahead.
Sure. So a lot of his decision is based on just being burned in 2022 with some of the speculative high growth names that he's bought. So like, I don't know, Tattoo Chef is one that comes to mind, for example. And 2022 was just a rough year for growth overall. So I do think that there is a level of that in like, once burned, twice shy, whatever that expression is. He's just hesitant as a result of that. And I double down on the profitability point just to say, hey, look, if you like my next question there was, if you're waiting for bottom line EPS profitability, you're going to have missed the boat because everybody buys in anticipation of that. And, you know, for him, it was more like, I'm going to buy this for a set number of years and invest for the long term. And so if I see 1 or even 2 quarters of profitability, similar to like the Palantir situation, that's when I'm going to be more comfortable that it is sustainable growth that analysts can project, you know, years to come. And then I can make a bull, bear, and base case on owning the company long term. But right now, I mean, even though all signs are pointing to that profitability, just the fact that they don't have it yet and the fact that he hasn't tried the product are the 2 main reasons with that backstory of 2022. Now, I will make a prediction. I will say that within 6 months, or let's make it before the end of the year, I do think he will be in SoFi. And the reason why is because, and the reason why is because he mentioned that he has listened to the previous earnings calls, the previous 2, and he said, you know, I'm really impressed with Anthony Noto, really impressed with the execution of the management team and just how they're talking about the product in general. I think now that that he's trying the product for the first time, in conjunction with like this is on his watch list, he's always sort of watching the movements on this name, the pieces of news on this name, and listening to the earnings calls. You know, I do think that one of the things that I asked him was like, well, back in 2019, you bought Tesla when it was unprofitable on the future growth potential. And that was the case until 2022 when some of these trades went the other way. And I think right now there's just an overall skepticism on any name that is unprofitable. But I think that as he reads more into SoFi, as he tries the product, I actually asked him, like, I'm really curious to see if you're going to cross-sell him to any other of product lines because he's starting off with like a savings account. I wonder if he's going to try Relay or something else. As he experiences that ecosystem, I do think that before the end of the year, he's going to be in the stock.
I think, so I listened to, I think like 35 minutes of the whole thing when I was at the gym, and I thought it was a lot of good stuff that he said. The good question you brought up though was like, well, on Tesla, you took the risk, and on SoFi, you're not for the profitable. And his argument was like, I could see the map for Tesla. I don't know if that argument's that good because Tesla had to like really pull it off for it to. I don't think SoFi is that risky compared to Tesla, even if they're not profitable. And management said Q4 it's going to happen. So I think he's just really hesitant because he's gotten burned with some of these growth stocks. But with this one, I think that bias of his hesitancy is over determining his ability to objectively see what's happening here.
Yeah, absolutely. And I think one of the other points, I mean, he just said it in that clip that we played, right? He doesn't necessarily know the valuation, whether it's going to be more comparable to like JP Morgan or whether it's going to be comparable to like a fintech in terms of the multiple, right? And that can really skew what your future projections are.
Honestly, I think this is one thing that I've just disagreed with a lot of people is just like the multiple expansion. Even if it does stay down as a growth stock multiple, but keeps up a growth rate in terms of actual fundamentals, then the stock will just follow the growth. If it's staying at a 1x price to book, but growing at a 40% rate year over year, okay, then that's the rate that we're going to grow at. You know, the multiple is to try to get that growth ahead of where it is. And so people will buy it faster and faster. If for some reason the stock gets pulled down to a price where people think that it's under, like they don't see the value in it, that's where the opportunity is. That's where the alpha is. Remember, this year, the stock was in the $4 or $5 ranges. It's in the $9 ranges, and people are looking for it to double again. It's like, no, if you were a smart investor that could see the SoFi opportunity before it happened, you're already up 100%.
That is true.
You know, so it's hard to continuously catch those 100% gains, but I still do think there's actually a large percentage of growth here for SoFi, even at these valuations. But you don't need the multiples to continue expanding. I mean, it is growing at a good rate.
Yeah, that is fair. Steve, anything you want to say or talk about?
Yeah, he's correct. Investment doesn't work for him right now, so he shouldn't invest in it. I mean, you can't knock somebody for not wanting to invest in something.
No, it's not a knock against him. It's a knock against the logic.
I mean, he's got every right to say that.
No, yeah. Obviously, everyone it's a free country. This is a show where we contest people's opinions, right? So, like, his opinion, we're arguing, is not the most logical here, even though we understand his past. But you have every right to have that opinion.
I mean, look, maybe and I don't know much about him, but with Tesla, maybe he thought, okay, if they're the one that's going to put EVs on the map and they actually pull this off, how much competition is there? Versus SoFi, there's a ton of competition everywhere you look. So maybe that was his line of thinking. Who knows? I've never talked to him. I don't know.
Yeah, I think there's another point there around the consumer aspect. Like, he is a high income earner, and he's now finally trying the SoFi products, and the product that he's starting with is the savings product, just due to that APY. And I think people realize that in this market, the high earners generally have a high correlation with financially savvy individuals that make the best decision, like they make the best move on the board when it comes to their money. And people realize that at this time there's not a lot of growth out there relative to the risk you want to take for that growth. And so as a result of that, like, SoFi is just going to funnel in more high earners, Jeremy being one of them. So regardless of, if he invests in the stock today or tomorrow, I think just him trying out the ecosystem is such an underrated point.
That is honestly what people should worry about much more if they're in the stock. It's not who else is buying the stock, it's who else is using the products. That is much more important. Okay. And so if you continuously hear SoFi's name come up and Wall Street doesn't care about it, consider yourself, expanding your alpha. There's an opportunity where the stock will continue to run. I don't know how people don't see it that way. Like, if you get to a company where, for example, let's say PayPal continues to fall in terms of a stock price, gets down into the $40 ranges, and Wall Street just absolutely hates them for some reason. It's the worst stock ever, blah, blah, blah. Okay. They're just going to take all their share buybacks and just buy it at this lower rate until they take themselves private. That will do you absolute justice on your share price, right? That you don't necessarily need investors to love your stock. Look at Steve's stock, Cisco. If no one's going to buy the company, Cisco will buy the company.
Cisco is still mind-boggling, and it's been on a little bit of a run since the last quarter earnings. But, this is a company that you had analysts saying back in, I think, 98 or 99, that was going to be the first $1 trillion market cap company. And if you actually look, and I don't have the numbers in front of me, but if you actually look at what Cisco has done, it's really amazing that they don't have a larger market cap, considering how much of the company they have repurchased, how much capital they've allocated through the dividend and repurchases, and how much revenue and profit and free cash flow they've grown over the past 2 decades. They've still never got back to their 1999 or 2000 highs of around like 78 or 82 bucks or whatever it was. It's crazy.
And so if you find a company that actually has good growth like SoFi's and match that with a low valuation like Cisco, you get a real great opportunity.
But something that Jeremy did say in that interview is very important, because we don't know how the market is going to value SoFi going forward. And I think a lot of that depends on their execution of the tech platform.
So let me do these super chats, because one of these super chats is exactly about I'm here. Is exactly about your question. Next on the screen goes black. I'm always here. It's just the camera dies, and that's why. So David, thank you for the super chat. Wow, I think I ate too much pizza for dinner because Vitaly, Chris, Carlos look really different tonight. This guy has sent like $1 trillion to me on super chats, and I love him. I don't know where he's got the money from, but now he's on SoFi Weekly. So thank you, David. But I just don't know where you're getting the money from. Josh, thank you for the $20 to, I think that's Tanner's channel. Thank you for that. And then David with another super chat for $27. In the future, do you think the profit margin on SoFi technology division, Galileo and Technisys, will be higher than their banking financial division? Just how big do you think it'll get? And to piggyback off Jeremy, will the market value it that way? Steve, you can go first.
Yeah, I don't think there's enough data right now to be able to speculate on that to any accurate degree, for the simple fact that we don't know what they're going to be charging large bank clients if and when they get them, and what the margin's going to be. But like Jeremy was saying, this could go either way. This could get a bank valuation, it could get a hybrid, or it could get a tech valuation. And to me, the valuation question lies with their tech platform. And if they sign up some large banks and some regional banks and they're showing incremental growing revenue, because if they get these contracts, it's not going to be a flat-based contract. They're going to have annual escalators after year 3 or whatever it is, and it's going to go up every year annually. They're going to, after the honeymoon phase, just like in real estate, you're going to have annual increases, price fix escalators. They're going to grow the revenue line. And if they're the ones that own the technology that's servicing the back end for a respectable percentage of the banking sector, I don't see how it doesn't at the very least get a hybrid multiple. Maybe it doesn't get a full tech multiple, but look, I think it's going to get at least a hybrid. That's my own opinion based on the due diligence that I've done. And I think it's going to take a couple of quarters to really see how this is going to play out. Like if they come out and just say, I'm not going to say a bank's name, but bank XYZ, that's a top 10 on assets. Let's just say they get a top 10 asset bank that they are doing the full back-end infrastructure for. What is that worth in the immediate, and what message does that send to everybody else about, hey, we just chose SoFi to do the back end. You're going to have other companies looking into it. And if that creates a ripple effect, you could see tech analysts start covering SoFi. Like there's a lot of things that could happen. And for me, this is a 3 to 5 years to see how this even plays out. And unless something changes, I've always said this is a 5 to 10 year hold for me. But it may take a couple of years to see how this plays out.
I would argue your point about not knowing the margins, and not saying I'm right. I'm just saying that from what I can see, I think it. Okay, so this is what we know. If, for example,
we know revenue and contribution profit, but we don't know what they're going to be charging for the full platform to a big bank or a regional. That's
sure.
what I'm saying.
Sure. So if you're dealing in payment processing or any of these things for small to mid-sized businesses, and then you move up to large enterprise, does the margins go up or down? They go down every single time because
economies of scale.
Yeah, because the higher you are, the more pricing pressure you have. So it's honestly, the higher up we go, the more pressure it's going to put on margins. Aside from the fact that there is cross-selling and they need more products. But management has been clear that right now contribution margins are about 20% for the tech platform. They're wanting it to get to the 30% in the long run. So whenever you're comparing that to the financial services division or the lending division, you're not even in the ballpark.
Yep.
Like lending is 70+%, and financial services not even there, but they want to hold 20% in the long run. So banking versus tech, I think it's definitely still in the banking side.
And I think like they're not mutually exclusive things in terms of having SoFi command a hybrid valuation from a multiple perspective, meanwhile having a massive discrepancy from a contribution profit perspective, because fundamentally the tech platform enables the high margins on the other aspects of their business. And even if it just does that, that's beneficial in its own self. Like they could roll out new tech products and then bundle those all together to get more contribution profit as an end result. But I think that even as the tech platform, even if it was just a tool to enable them to get 70% plus contribution profit on the lending side consistently going forward, like that alone should command a hybrid multiple from a valuation perspective.
Have you guys heard of Chase Payment Tech?
No.
Okay, it's Chase Bank's payment technology. They do point of sale terminals. They do processing. They do all these sorts of things. And the funny thing about Chase Payment Tech, and from what I was reading about recently, is that if you get a business account with them and you get a treasury account with them and you need payments processed, they will bundle that in because you're already a large client practically for free. Like they will do better pricing than Adyen and Braintree and all these other payment processors, because obviously there's other products that you can get. So if SoFi, this is what I love about SoFi so much. If, for example, they do get into business accounts, they start doing this, the opportunity for growth because they have a payment provider as well is just crazy. They can bundle products into payments with Galileo. Like there is, I think, some cross sell between Galileo and their existing, business accounts and everything that they can offer very soon. Now, right now, Galileo has kind of carved itself out a niche for offering payment tech to other fintechs, but it doesn't need to be. It can be, any mom and pop shop or other business that wants to set up embedded finance or anything like this. There's so many options to grow.
Let me ask you something, because I am not knowledgeable in what I'm about to ask you, and I think that if anybody's going to know this answer, it's going to be Tevis or yourself. Sorry, Matt. No, it's something that I think that you guys, because of the stocks you.
All right, now we got to hear the fucking question. What's the question?
I want to hear this question.
So, based on what you just said, take Block, for instance, and their point of sale.
I don't give a fuck about this anymore.
Theoretically, could SoFi get into the business sector, offer a point of sale system, and undercut the market? Is interchange rates stagnant, or does each payment processor tag on X amount cents on top of an interchange rate for credit card processing?
Definitely, yeah. So each part of the process, everyone takes their own rate. So it depends on whether you have like ISOs within the business, they'll take a rate. If you don't need those and they can cross-sell within their own business, like Adyen will offer the point of sale service, and then they'll do the acquiring and the payment processing and everything internally. So they have some of the lowest rates possible.
Would SoFi even need a POS to do the interchange? Like, do they need the hardware aspect of it?
Who?
Like, would SoFi even need a POS?
Wouldn't. I was just saying that just for a full suite of products from A to B.
The truth is SoFi doesn't even have that technology right now. They don't really they're more on the card side, the consumer side, setting that up, issuing it, doing all those things for the client. You're really talking about like the more merchant side, payment processors, which we're really not into very much right now.
Yo, why does SoFi have 28,000 tweets today and trending on Twitter?
I don't know.
28,000? Like,
did they break 9 today or yesterday?
2 days ago, they broke 9.
Then
it's probably not about the stock. It's probably about like SoFi Stadium has like an event or Super Bowl or something, or sorry, football season or something.
Either way, that's good. All right. I think we're done.
Cool.
That was a great way to end it.
I mean, we can have the block discussion for hours, but like there's nothing more we can say on that.
Dude, okay. Can I finish it off then with saying one last thing?
Go ahead.
Whenever you own the client, a lot of these things that are happening is beneficial to SoFi. So where there's all like, if you guys follow my channel specifically, I've been talking about payment providers and the actual margin compression that they're seeing, the margin pressure. Okay. PayPal's down, Adyen's down, all these companies are down. SoFi and the companies that own the clients are the big benefactors to that. The rates are coming down, they get to win. So unbelievable things I think are happening in the fintech space. And I think the big banks, the one-stop shops are here to win greater than any other player in the entire space.
Amit, can you put up this link that I sent in the private chat?
Oh,
also this week, super minor news, and I think we can end on. This week, SoFi won the 2023 Finovate Awards. Basically, just another award that they won for the best digital bank. And SoFi was commenting on this, but obviously
by far the worst award to win, but it was good.
They win every award at this point, so just
I mean, it's just a testament to their product quality, right? Did we talk about the Instacart IPO or no? Or and ARM as well? Like SoFi has allocations on both of those.
We didn't, but we have a minute left.
Ruth Tooth says, "Can we end the stream with everyone saying something nice about everyone else?"
Hold on, real quick, David. Again, thank you for the super chat, but I realized there was negative short seller report on Delo, but could it make sense for SoFi to merge with Delo? I have no idea. I don't think any of you guys have.
Delo.
I don't even know what Delo is.
Yeah, I've heard of Delo, but I haven't.
Duolingo?
No.
Delo.
No, that's DU. As David, I feel bad. You sent $14 and I don't know how to answer this question, but yeah.
Amit, did you see the short interest on SL?
SLG? No, I didn't.
26.33%.
Shorts are mad. Shorts are mad. They lost a lot of money. All right, so
Oh
let's
my God.
Steve, by the way, I emailed you for Palantir, so you have the link in your thing.
I can't.
Okay, all right. You can, that's all right.
Do you have enough people?
No, we have enough people. We're good. Don't worry about
I
that.
think that you guys are amazing. I love the combination of this group. I think we complement each other. I think the people in the chat that say Amit is too silly for the group is mad dumb of a comment. Okay, he's the person that puts all this together. I think it's crazy how much I look up to Amit. This guy's work ethic is crazy, and he works harder than any of us. And yeah, and well, here's the other thing too, is that I'm sure Tevis and Steve work very hard, but it's not as public in the way that you guys work. So being able to see what Amit's doing in the public eye is it's freaking amazing. So I absolutely love all you guys. This has been some of the most fun ventures that I've ever decided to do is YouTube. So I love you guys.
Amit, what's it going to take to shave your head?
That's what you have to say after Tanner says that shit. I'm not shaving my head, bro. I could barely get girls right now. You think I'm gonna get girls if I shave my head? Okay, so Steve, I can call him at any time. He'll pick up the phone, and so that's the great thing about Steve. He'll answer my questions, give me a bunch of wisdom, and basically any question I have in the world about stocks, I know he can answer it. So
good point.
So I love Steve, just a great resource, and I'm sad he's not going to Vegas, but we've become good friends, and so that's awesome. Tanner works hard as well. I mean, look, Tanner works his ass off. He streams every day. He's been doing it for like 3 months at this point. So he's a hard worker. I would say, if not as hard as me, he's killing it on YouTube. And he's always up to date on all the shit that matters when it comes to SoFi. So it really helps. Basically, there's no podcast without Tanner. Let's just put it like that. Like if Tanner takes a week off, it's going to be pretty hard to do the podcast.
He really does cancel every time I take a week off. So that should stop. I'm not telling him to do that, but that's just the way Amit thinks about it. But
yeah, Tanner was like, I can't make it. I was like, what? We can't make it then. This is because
no, you guys should go on. I want to watch a show.
That's kind of like Palantir Weekly without me, Matt. Like you need some of those core figures to kind of make the show, and so that's why it's really important. And then Tevis also, in terms of just helping to make a lot of the fucking analysis make sense, because quite frankly, I think everyone knows. I don't know SoFi as much as these two guys know SoFi. I think Tanner knows it the most, and then Tevis is a very close second. So when it comes to bringing up topics, then like it's just true. You mean you do a fucking live stream every day about SoFi, right? Tevis has like a real job in the world, and so he's a little bit more busy. But he can add a lot of analysis that I quite frankly can't add. Also because he's a product manager in the real world, so he actually works building products. And SoFi is a startup essentially that's public that's trying to build products. So when it comes to cross-selling, collaborative filtering, all that stuff, he can actually speak on that from his own perspective.
Cool. I can wrap up. I think so. There's a lot that happens behind the scenes with regards to talking about content, just as like in itself, in terms of how do we best like just going through the same cycles. And I remember like a year ago, when we were basically, I think SoFi Weekly is almost a year old at this point. I think we started like mid-October, something around that time. And around that same time, we were talking about this Mr. Beast interview that he gave, where he was saying that how he grew very quickly was he had a group of other content creators, and they just had a group chat, and all they did was share ideas around how to grow faster, what worked for them, what didn't work for them. And that's something that we started, like even subconsciously to some degree, started working on more, and just sharing insights and like what worked for us, what didn't work for us. And that's like when, we had this whole debate around like, should you have high quality, highly edited, or should you just go quantity? And Amit was doing live streams every day. And at some point, Tanner went and did live streams every day. And, Tanner's somebody whom like I can just DM on Twitter at any time. We could just like hop on a live stream and do like a members only or something like that.
Every day, I
what
think.
are you guys doing?
What's that?
DM on Twitter. You have his phone number. Text him.
I can just text him too. Yeah, but he's weird like that. He'll respond faster on Twitter, and I don't want to like bother him with his work people. But
Yeah,
still,
don't
like
worry.
I can contact him every day, and we can hop on live streams. And then for Amit, like I had a giveaway this week, and I remember I posted this, and Amit was like, "Why are you doing this? Like you should be doing like value oriented stuff, and you should be making more posts." And I was just like,
Just completely went in on him.
just completely just ripped
Yeah,
me
I was like,
apart.
I don't think this strategy is the best strategy.
Yeah.
here.
But
It was like your parents spelt your name wrong. Like he was just
Well, no, and
trashing
just
Devin.
to give a little context, the reason I said that is because we text in the chat all the time about like stupid stuff. Like, for example, I think Tevis, you sent a Mr. Beast's tweet of like,
yeah,
I get more clicks if I close my mouth, and it's like,
the thumbnail.
yeah, and it's like that's cool, but at the end of the day, that's useless for us. Like, what really matters is like digging into the real meat of audience building, not like can someone close their mouth or not. You know what I mean?
Yeah. But like, so I think that for me, like I read all of that from a critical sense in terms of like, this is going to help me grow and help me like reach audiences better. And then the next couple of days, man, I just see like 3, 4, 5, 6 of Amit's tweets of every single like news article that I've already read on Twitter. I just see him like retweeting and like giving his take or like making a video about it or doing like even the strikes that are happening at like the UAW strikes. He was just like, oh, we've been covering this for like 3 mornings, and I'm like, fuck, like these guys just kill it in terms of the volume that they output, and so really makes you step back and just say, wow, like it's crazy to just be surrounded by these other content creators and like ultimately know that you have to step up your game to keep up.
Yeah, and sometimes that requires like different, difficult, tough conversations between us internally because we're all trying to grow, and it's like at the end of the day, we're all trying to figure out what is the best path, and everyone can have different perspectives, but like having a core group where you can have those discussions. I mean, Finance Junkies has it all the time in our WhatsApp. I mean, we're constantly going back and forth. This is good. This is not. I mean, constantly getting into little fights, but at the end of the day, we all love each other because it's like we want the show to grow. We want SoFi Weekly to grow. And even though Noto can't come on the show, but he likes Kramer more than us, we'll still have a good show without Noto or Jeremy, whatever the fuck his name is, that's selling all of his SoFi before their gap profit. But we'll still have a great show.
All right, guys. Thank you.
Thank you, everybody. Pouncer Weekly up next. Hope you guys have a great weekend. We'll see you next week. Bye, everyone.
All right.
See ya.
So, Tanner.